Some reasons to get a personal loan. Personal loans are good for a variety of purposes, from consolidating debt to putting in that pool your family has always dreamed of. But they are personal, which means your reasons are yours. If you're thinking about getting a personal loan, learn how they work before applying. How personal loans work compared to other financing. Personal loans are usually a type of unsecured loan, meaning you aren't required to offer collateral in case you don't repay the loan. There's nothing for a creditor to seize if you take out an unsecured loan and don't repay it, but there are still consequences. Your credit score will plummet and your loan could go into default. Secured loans, on the other hand, require collateral, like your home in the case of a mortgage or your car in the case of an auto loan. If you don't pay back your secured loan, the lender could seize your property. Unsecured loans use your credit score and credit history to determine if you qualify. While home and auto loans require you to use those loans for specific purposes, personal loans don't have the same requirements. Instead, you can use a personal loan for almost anything, as long as it's within the terms outlined in your loan agreement. Personal loans are awarded in a lump sum, and you make monthly payments until your loan is paid in full. This is different from credit cards, which are a type of revolving credit. Credit cards are used as needed up to a certain amount, or your credit line. As long as you make monthly payments, you can continue to spend what you'd like up to your limit. Some reasons for a personal loan. Personal loans can be used for practically any need you have within reason and according to the terms of your loan. You can't use the money for anything illegal, to gamble, or, in most cases, for post-secondary education expenses. Here are some good reasons to get a personal loan. Emergency cash assistance. If you need money right away to cover bills, an emergency cost, or something else that needs immediate attention, you can take out a personal loan. Most lenders provide online applications that allow you to learn whether you've been approved in minutes. You could receive funding that day or within a few business days, depending on your lender. You can use a personal loan to cover emergencies like paying past due home payments and utilities, medical bills, funeral expenses, an unexpected car repair. A personal loan is a good alternative to a payday loan. Payday loans are short-term, high-interest loans that usually require repayment when you receive your next paycheck. You typically won't have to submit to a credit check, and you can get funding right away. But payday loans could do more harm than good. Interest rates may approach upwards of 400%, and many borrowers don't have the funds to repay the loan in full as quickly as payday loans require. Debt consolidation. A personal loan can be used as a form of debt consolidation, especially with credit card debt. It's also a popular reason people take out a personal loan. Personal loans charge lower interest rates compared to credit cards, particularly if you have good credit. The best personal loans charge an interest rate as low as 4%, well below the double-digit percentages most credit cards charge. You can take out a personal loan, pay off the balance of your outstanding credit cards, and then make one payment to your new personal loan servicer. Home improvement and repairs. If you own your home, you could take out a home equity loan to fix or make upgrades. But you can also take out a personal loan. Home equity loans and lines of credit are great for tackling home projects, but they're secured and use your home as collateral. Also, keep in mind that some lenders have tightened HELOC lending requirements due to COVID-19. If you don't want to risk losing your home in case you fall behind on payments, a personal loan is a solid substitute. Along with that, it might be quicker to get a personal loan compared to a home equity loan. Moving costs. If you're moving close to where you live now, you might not need to cover any major expenses. But if you're moving out of state, you may need extra cash to pay for moving costs. Moving far away means covering the cost of packing up your belongings, possibly hiring movers and transporting your things to your new location. A personal loan also can help fund the process of finding a new place to live. For instance, if you find an apartment, you might need to cover the costs of the first month, last month, and a security deposit. You may also need some cash to furnish your new home. Vehicle financing. Auto loans are available if you're looking to buy or lease a car, but personal loans are also available. Auto loans tend to have lower interest rates compared to personal loans, but they are secured loans and use your vehicle as collateral. If you're worried about missing payments and your car getting repossessed, a personal loan might be a better option for you. Wedding expenses. We don't recommend borrowing money to pay for a wedding. Instead, consider paring down your wants to fit your budget, rather than increase your budget to fit your wants. But if you do need to borrow money, you have a few options, like credit cards and personal loans. Credit cards tend to have higher interest rates compared to personal loans. Taking out a cash advance on your credit card can have even higher interest rates and fees. A personal loan is a less expensive option for borrowing if you need the money to cover the cost of a wedding. Some reasons to avoid a personal loan. While personal loans can be a saving grace in times of great need, there are some instances you should avoid borrowing money. Consider avoiding a personal loan if you can't afford it. Borrowing money in the short term is one thing, but remember you'll still need to pay it back. If you can't afford monthly payments for your new personal loan, consider skipping it. You don't need it. If you're taking out a personal loan to cover the cost of a vacation or something you don't need in the immediate future, think about putting it off until you have more cash on hand. There are better options available. For home improvement and repairs, a home equity loan or line of credit might be a better choice. For cars or other vehicles, you may save money with an auto loan. Before you take out a personal loan, weigh all your options first. Borrowing money shouldn't be done on a whim. Instead, review your financial situation to see if a personal loan is the right choice for you. Advantages and disadvantages of bank loans. Remember, a loan is an amount of money borrowed for a set period within an agreed repayment schedule. The repayment amount will depend on the size and duration of the loan and the rate of interest. Loans are generally most suitable for paying for assets, e.g. vehicles and computers. Start-up capital. Instances where the amount of money you need is not going to change. The terms and price of loans will vary between providers and will reflect the risk and cost to the bank in providing the finance. For larger sums, the pricing and terms may be negotiable. Banks will loan money to businesses on the basis of an adequate return for their investment, to reflect the risks of defaulting and to cover administrative costs. If you have an established relationship with your bank, they will have developed a good understanding of your business. This will help them to advise you about the best product for your financial needs. Different types of bank loan include working capital loans, for short notice or emergency situations. Fixed asset loans, for buying assets where the asset itself is collateral. Factoring loans, loans based on money owed to your business by customers. Hire purchase loans, for long-term purchase of assets such as vehicles or machinery. Advantages of term loans. The loan is not repayable on demand and so available for the term of the loan, generally 3 to 10 years, unless you breach the loan conditions. Loans can be tied to the lifetime of the equipment or other assets you're borrowing the money to pay for. At the beginning of the term of the loan you may be able to negotiate a repayment holiday, meaning that you only pay interest for a certain amount of time while repayments on the capital are frozen. While you must pay interest on your loan, you do not have to give the lender a percentage of your profits or a share in your company. Interest rates may be fixed for the term so you will know the level of repayments throughout the life of the loan. There may be an arrangement fee that is paid at the start of the loan but not throughout its life. If it is an on-demand loan, an annual renewal fee may be payable. Disadvantages of loans. Larger loans will have certain terms and conditions or covenants that you must adhere to, such as the provision of quarterly management information. Loans are not very flexible, you could be paying interest on funds you are not using. You could have trouble making monthly repayments if your customers don't pay you promptly, causing cash flow problems. In some cases, loans are secured against the assets of the business or your personal possessions, e.g. your home. The interest rates for secured loans may be lower than for unsecured ones, but your assets or home could be at risk if you cannot make the repayments. There may be a charge if you want to repay the loan before the end of the loan term, particularly if the interest rate on the loan is fixed. When loans are not suitable, it is not a good idea to take out a loan for ongoing expenses, as it may be difficult to keep up repayments. Ongoing expenses are instead best funded from cash received from sales, possibly with an overdraft as backup. Thank you for watch this video. Don't forget to like, comment, share and subscribe.